Uranium prices spiking as the Russia-Ukraine war rages on. The Global X Uranium ETF up more than 13% in the past month. Elon Musk tweeting, "It is now extremely obvious Europe should restart dormant nuclear power plants. This is critical to national and international security." So with oil and natural gas price spiking, there could be a push for nuclear here. For more on where uranium prices could be headed, let's bring in Rohan Reddy of Global X. Rohan, great to have you with us.
Great to be back, Melissa.
It may be a matter of energy security in the long run, but immediately, Rohan, can they actually restart these power plants? A lot of them are not operational, and a lot of them are on their way to being decommissioned in Europe.
Well, I think Elon hit the nail on the head. Right now, nuclear is one of the best power sources that you could have, not just in Europe, but even across the world. And so a couple of options that Europe has is they could start to delay the phase out of some of those nuclear power plants that were scheduled to be decommissioned. So for Germany, they were scheduled to phase this out in 2022 this year. They could start to delay that. Belgium has shown some pushback as well. So I think that's an immediate option number one. Option number two is building new nuclear power plants from the start up. So we've seen this not just in Europe, but even in big power centers like Asia. Those have been really supportive of adopting nuclear power. So we think there's a lot of options in this market.
So what's been priced into the price of uranium at this point, Rohan? I mean, take, for instance, the 3 operational plants in Germany. They're, as you mentioned, scheduled to be decommissioned by the end of 2022. If they extended that life cycle, which is not necessarily an easy thing to do, as I understand it, according to what I've read, what would that mean for prices?
Well, we've seen a little bit of that play out in the U.S. so far. So we've seen the first 80-year permit given to a couple of the nuclear power plants. And even if it does become feasible at some point in Germany, that could add some real demand towards some of those uranium producers that, did get hit by COVID, and they haven't been able to restart production as fast as they would have liked to. So we think right now prices right around the $50 pound range. They could shoot up even into the $60 range. And then when you see all this momentum from demand in new nuclear power plants being built, combined with the fact that there is key producer risk. So Kazakhstan is one of the biggest producers in the world. They've seen some geopolitical tensions along with the Russia-Ukraine crisis and the risk-off sell-off there. So we do think that prices could even shoot up from that $60 range to potentially even $70, $80 just off of producer risk.
Rohan, it's Tim Seymour. I'm long your ETF. I'm long uranium more broadly. And I think, independent of Russia-Ukraine, uranium's going a lot higher. Help people understand in the ETF what the exposure is. And there are some more pure plays and ways to get more derivative exposure. CCJ, obviously the biggest position, Cameco, which is as pure of a play as I think you can find. But help the audience understand how to get exposure.
This is a real full value play across the entire uranium value chain. So we have the miners, companies like CCJ, Kazatomprom, those are like some of the biggest in the world. And then we also have some that are involved in the entire downstream part of the nuclear aspect. So about 70% of our ETF is what you'd consider pure play. The remaining 30% is across that value chain that includes some utility companies. So we think it's a nice exposure to companies involved both directly towards uranium prices and some that are involved more on the utility side. So in down markets, it does help blunt some of the downside impact. And we have seen a lot of investor interest within our URA ETF. This year alone, we have about $300 million in net new assets that have come into our fund, and it's about $1.5 billion in assets today, a record level.
Rohan, great to have you. Thank you so much. Rohan Reddy, the Uranium ETF. Why this one? Why a comprehensive sort of view of the investment? Why not just go CCJ?
Well, because CCJ I've owned, and again, talk about back to the future. This is a stock from 10 years ago, yeah. and this is a stock that we've talked about on this show, and they've had significant problems with a handful of their mines, and so their MacArthur mine is kind of their flagship. They've got a new mine, Cigar Lake, coming on with higher prices. It certainly gives them the ability to reinvest in additional production, and I think they're going to do that. I think right now it is a very good call, but that's the problem. These are miners. dollars. And we've seen this. We've seen this in gold. We've seen this in copper. And you have a lot of risk tied up into their operations.
No question. CCJ, though, as Tim knows, is the second largest uranium producer on the planet. I think it represents 18, 19%. And the stock, listen, again, I understand it was past history. 2007, this is a $52 stock that fell on hard times. A lot of it self-induced. But if they figure it out, this $25 stock should be a $50 stock in this environment.